Hello, I'm Cristina Marujos, and you're watching the Daily Market Comment at XM.com by Marios Hadjikyriacos. After a relatively quiet session on Thursday, the spotlight will fall on the U.S. employment data today. Markets are still pricing in an approximately 25% probability for a double rate cut of 50 basis points at the Fed's upcoming meeting, so any significant surprises in these data could be crucial in shaping expectations for that event and, by extension, for the dollar. Forecasts point to a solid report overall, and if the actual prints meet expectations, that will likely calm some nerves about a weakening labor market and thereby prompt investors to trim some of their Fed easing bets, lifting the dollar but pushing stocks lower. Even in this case, though, any relief rally in the greenback and any retreat in equities may prove relatively short-lived. The bigger picture remains that of a weakening dollar if central banks indeed start easing as aggressively as markets expect. In this environment, an outperformer may be the yen, as the Bank of Japan already has in place the most aggressive stimulus program globally and therefore has almost no space to ease further. Canada's jobs figures for June will hit the markets at the same time as the American prints. Expectations are for a relatively soft set of data, and while a weak batch of data may hurt the loonie on the news, the jobs market has been on a tear lately, so one soft month after such a streak seems natural. Indeed, the Canadian economy has been an oasis of strength lately, so the Bank of Canada may be among the few major central banks that won't cut rates soon. The bottom line is that as long as the Fed Bank of Canada policy divergence narrative holds, the broader outlook for the loonie remains bright. The main story yesterday was that the yield on German 10-year bonds fell below the ECB's deposit rate for the first time. While the move didn't carry through into the FX arena, with the euro trading mostly flat, it still highlights that investors are snatching up all the European bonds they can find, confident that incoming ECB President Lagarde will not hesitate to hit the QE button when the time comes. Thank you for watching the Daily Market Comment at XM.com. Have a great weekend.